Welcome back, Outfinders. The markets had a tumultuous Wednesday, but it is a terrific Thursday. Wow. Yeah, let's just go ahead and talk about yesterday afternoon real quick. My goodness. We basically saw a 3% sell down yesterday afternoon all the way into close, a little bit over 3%. Basically, when we got the Fed interest rate decision. Am I shocked? Not really. Would I have played that for a 3% sell down? Nope. But what led a lot of this wasn't just that we got a 0.25% rate cut. I mean, actually, that wasn't going to be it because the market was fully expecting that. Let's go take a look at the Fed dot plot, and basically this headline here from Finance Yahoo that kind of just talks about it. I put it in the Discord, so it is there. Anyways, the Fed Reserve lowered interest rates 25 basis points to a range of a 4.25 to 4.5, somewhere in there. This is the dot plot, the Fed dot plot. So, one thing that you can kind of notice here is as you are looking at this, the lighter shaded blue area is a little bit more of that was the September meeting. Sorry, the September meeting and December meeting is a little bit more of the darker blue, and just an obvious observation is we have higher levels of the Fed committee expecting for interest rates going forward. So that was not received well. Obviously, we saw a pretty good drop there initially, and it just continued throughout the afternoon. And this is something that's put out. Every Fed committee member, chair member, they basically put a dot, on the timeline, where they think interest rates will be, and that's why you get the Fed dot plot. So each committee member, puts their dot where they think it's going to be. So you get this update, and they updated every other Fed meeting. So we didn't get an update in November. Last time we got it updated was September. And obviously, we got it this December. What I think the market sniffed out, and something I've kind of, we've kind of been talking about here, is the market seems to think we're going to go back to the 2000 era. You can say 90s, 2000s, and 2010s eras of declining interest rates all the way down to the super low area where we had them, right? Let me just quickly go over to the 30 year. I'm just looking at monthly real quick. So you can take a look at the monthly, and coming out of the late 80s on the 30 year, I mean, you just had this huge decline in interest rates. I mean, so, the 90s we continued to decline, 20s, the 2000s we continued to decline. We got to some pretty low levels, and then into the 2010s, we got to extremely low levels. And the market and market participants, investors, seem to think that we are going back down to these levels, and maybe back down to the levels that we put in 2020. And I don't, I mean, I don't see it. Once you change momentum, and you can see the momentum has changed here over the past couple of years, to where now yields are going higher, and I think the market kind of sniffed it out that what they're expecting going forward might be wrong. So if our future trajectory for yields going forward is either flat or maybe even a little bit higher, for whatever the reason is, the market has massively misallocated, and yeah, I'd say massively misallocated certain investments. So, anyways, that's just kind of some high level thoughts on yields, but I think the market kind of sniffed it out yesterday that as far as getting back down to the levels of even the 2010s and staying at some of these lower levels of the 2000s, I don't know if that's going to happen. And I think the market was kind of sniffing that out yesterday. Anyways, SPY had a pretty good drop yesterday. Yeah. Oh man, it's like everything was getting hammered. They had a nice little gap up here today, though. Not unexpected. I mean, we'll take a look at the daily picture because we did have a nice little gap of about 0.85% there, but you see we're chopping down. Still positive, currently up 1/3%. Qs currently up about 0.1%. Nice gap up here on the Qs as well. about 0.9% gap up. So tech getting hit a little bit. How much was the Qs sell off yesterday? Qs sold off 3.5% by close from when we got the Fed announcement. IWM got wrecked yesterday. My goodness. I mean, you can see the IWM was completely caught off guard by this. You can see this uptick that it was having for the hour leading into the Fed decision in the dot plot, and this thing got absolutely wrecked. This thing was down 5% by the end of the a 5% move from when we got that announcement. So the IWM got absolutely shredded. Obviously, IWM, smaller, medium-sized businesses are not going to benefit from a higher interest rate environment, right? That's not exactly a beneficial thing for them, but yeah, it is what it is. Anyways, are currently down 0.4%, so they had a decent gap up, but they have traded negative. Everything's traded negative from the open today. DIA down, currently up. Down, yesterday, obviously, but currently are up about 1/3%. RSP's currently negative. They had a nice little gap up today as well. So everything kind of looks the same. Everything's kind of trading the same. Not too much indifferent. The RSP, man, it's just unbelievable, man. How many days in a row, and then you get this, not even how many days in a row you got red candles, and then you have this huge drop. I mean, there's not a green day in there for the past like 2.5 weeks. It's just nuts, man. Yeah, I got nothing. It's in between the 100 200 moving averages, and that was kind of the interesting thing about yesterday's sell-off. I mean, just the massive air pocket that of investor sentiment on what they've wanted to continue to happen and what they think is realistically now going to happen. DIA, yeah, pretty big breakdown. Didn't quite get to the 100. Currently up. IWM broke through the 100 moving average. I mean, it's back into its choppy zone pre that before the election pop off there. Qs. So this was an interesting one. How much? Hold on, real quick. How much was the? So the IWM was down 4.4% yesterday. The DIA was down 2.6% yesterday. The RSP was down almost 3%. Okay, so the Qs was down 3.6%, but IWM got wrecked. They got shredded. That was a pretty big eye-opening moment for investors, I would think. I'm not saying that we're not going to go on a little bit of a run here to end out the year. Obviously, we just got the catalyst out the way. I'm not going to say people aren't going to be mindful of what was just announced, but this is typically a very bullish time of year. We've already seen bullishness come in throughout the year, especially here on the Qs. I mean, the Qs is still positive for the month of December. I mean, think about that. So the Qs is still up about 1.25%. That's even dropping. What was that? 3.6% yesterday. So yeah, I mean, it doesn't look like we're going to have a bad end of the year at all. I think it's going to set up a really interesting scenario as we get into January. I mean, because look at how flat that top was. I know we kind of talked about that yesterday on the live stream. It's just kind of this flat momentum breaking top here. And then we just got that drop yesterday right through a lot of moving averages. Yesterday's price action to sell off basically from the all-time highs. And most of these, we're all at all-time highs. Right? Some of them had already started pullbacks, right? The RSP, DIA, IWM, they had all started kind of pulling back, but the Qs and the SPY were basically at all-time highs yesterday. So for the market to drop as significantly as it did from all-time highs, definitely has to be very eye-opening to a lot of people, as if all of investors before yesterday were thinking one thing, one way the market's going to go, one way interest rates are going to go, and now that's no longer going to be the case. Just how out of position is the market? That's going to be the question. And when you have, I know they're trying to pass a spending bill in Congress before they break for Christmas break. So you have those dynamics and an administration that wants to come in and cut spending and cut government inefficiencies and stuff like that. It just goes back to what we've been talking about. I just don't see it. I don't think it's gonna pan out that the market's gonna continue just to absolutely enjoy easy money going forward. I think it's gonna be a little bit harder for, especially for a lot of these corporations, to continue to bring in revenue. Obviously, there's gonna be a lot of companies out there that do really well or aren't gonna struggle as much to kind of do that. And so, anyways, that's a look at across the markets and kind of just some general thoughts from yesterday to today. VIX. Oh yeah, look at that explosion on the VIX. Woo, woo. Oh man, explosion. The fact that we broke these three little triple tops here back from early fall. Yeah, it's interesting. Obviously, we got a little gap down today, but yeah, that was a pretty big breakdown, breakout. Dollar responded very bullishly. And that's gonna be the other thing. I mean, not just the economic side, but I mean the dollar and yields are gonna put pressure on corporate earnings, big time. GLD, pretty big breakdown, down broke that 100 moving average. Let me check the futures. So you got a nice little lower wick yesterday. A little lower wick. I mean, it's a huge lower wick. Is that real? I don't think that's real. That doesn't look real. I mean, there was a bounce, but I think that should have been in like today's. I think today's upper wick, that looks real. That lower wick for yesterday's GLD or gold here, that should not be. It should have held lower. That might be just a pricing anomaly here. So you got a pretty good breakdown day yesterday. You got a large upper wick coming in today on the future side. That actually doesn't look like a bad bearish play. And I know I have said adamantly over the past year, I don't want to play gold bearish, but you're getting to a point where you got a pretty large air pocket in here, and that's a pretty good setup there. That's a pretty solid setup. So breaking through that 100, if you want to try to take gold, I mean, I wouldn't do it, but I'm just saying that's not a bad setup. That's all. Anyways, GLD probably going lower. Yeah, yields, not shocked. Not shocked. Not shocked yields are higher, right? We saw the dot plot, mostly just shift higher. 2-year yields actually down pretty good today. Interesting. So that 10 and 2 is probably going to be really high today. And then take a look at the 30-year. 30 years exploding higher. Yeah, so we take a look at that 2-year. Yeah, look at that thing exploding higher. So yeah, we were definitely done. We are definitely just going to be inverted now. I'll keep an eye on this for the rest of this year, for the next couple of weeks, and then probably won't have to worry about it as much anymore going forward. As far as the 10 and 1, let me see the 10 and 1. That was the 10 and 1. Yeah, 10 and 1's definitely rocketing. So yeah, I think we'll be good. I'll continue to monitor this as we wrap up this year, but after that, we're probably going to be done with the yield curve inversions. HYG, they got wrecked. They were definitely giving you some warning signs last week. Definitely giving you some warning signs. Dropped off to the 200 moving average on the HYG there. LQD, massive breakdown. I mean, look at that little pennant pattern. Oh my goodness, that was super solid. This thing's getting pretty extended though, from the shorter term moving averages. I would not say it's not going to drop a little bit more. It probably makes sense, but you're probably going to get a decent bounce here. If you're digging the idea of playing some of these bonds bearish, you're going to have a pretty good retest probably into this 108 level here, at least on the LQD. I would imagine you're probably going to get a retest there. So, and you can kind of layer into this, probably like right here at the lower end of this little lower wick from November 15th. And then your probably last spot would be right here around the 109 level, or wherever the 200 moving average would be. Might be around the 109. And then I'd probably pick a spot halfway between both of those. So you got like the 109 and then 107.60. So maybe like 108.30 or something like that. So you kind of layer into that 3 times if it comes up for a retest. Stop loss maybe like up here, up above some of these pivots. There's no reason why we should be getting up back that high. Same kind of deal. You're probably on the TLT. We had a pretty good breakdown here the past 2 days. You're probably gonna be looking for a retest back into some of these previous pivot levels. Anyways, yeah, we got some pretty large issues going on out there now. All right, as far as sector rotation for the day, energies, utilities, tech, communications, discretionaries slightly outperforming there. Industrials underperforming. Staples, energies, real estate, materials, and healthcare at the lower end of the day. As far as intraday price action, we got utilities doing very well. Wow, okay. Staples, financials doing pretty good. Tech kind of in line with the market there. Communications, healthcare, real estate, industrials, materials, discretionaries, and energies at the lower end of the day. Real quick, take a look on how the market has played its hand since yesterday when we got the announcement. And you can see Staples and utilities held up pretty well. Actually, Staples had a pretty good rally there when the market continued to sell off. People got real defensive. You can see that really solid defensive move there. And you can see utilities had a nice little bump there going into that final hour as well. So financials, healthcare, communications all outperforming the general market. You got energies, industrials, tech, materials, real estate, and discretionary is all underperforming. So yeah, we've had some pretty good rotation, especially there in that afternoon. You can see how what just got hit really hard. I know TSLA was down very significant yesterday.